is a common axiom in business that 95% of a company's potential market is located overseas. A company that limits itself to sales generated within domestic borders is missing out on the potential to grow its business exponentially. With Business Perspective's comprehensive coverage of overseas market trends and dynamics, there is no way you're missing out on this growth potential. Hello and a warm welcome. I am Jackie Mutasi. Let's have a look at what's coming up in the show this week.
Between March and this time in August, a lot of companies have expressed interest in investing in Uganda.
We think that by participating in this summit, we will indirectly impact the lives of the everyday Ugandan through agriculture, through infrastructure development, through attracting the right investors to come and invest in Uganda.
Having this summit is going to enhance our market for our products.
Last week, Business Perspective took an all-inclusive look at strengthening bilateral ties between Uganda and South Africa. This week, we are glad you have joined us for the second half of this conversation. The focus, however, changes a little to the Uganda-South Africa Trade and Investment Summit, a pivotal event that holds the promise of propelling economic growth and collaboration between the two nations.
Uganda and South African governments have enjoyed warm and friendly relations since the signing of a formal diplomatic relation agreement in 1994. The bilateral relations have also helped promote trade and investment between the two countries. Latest data from the Bank of Uganda shows that the East African nation and South Africa's trade volumes increased from merely $76 million in 1999 to $334 million in 2019 before slowing down to $148 million in 2022 owing to the effects of the coronavirus pandemic. However, these trade volumes are in favor of South Africa because it exports mostly high-value products such as machinery, chemicals, plastics, electronics, live animals, books and newsprint, textiles, footwear, aircrafts, and household goods. On the other hand, Uganda exports products such as cotton, gold, tobacco, coffee, and fresh flowers. It is on this basis that Uganda and South African governments have organized a second leg of Trade and Investment Summit to be held in Kampala next month to actualize deals and initiatives that started during the first summit held in Pretoria, South Africa in February this year. The first summit registered numerous successes for the two countries, including signing 3 agreements in the areas of promotion and protection of investments, bilateral trade, and the establishment of a joint permanent commission.
Stephen, while we look ahead to the second Uganda-South Africa Trade Summit, perhaps you can talk to us about the highlights and the outcomes of the first one in February.
Yeah, so the summit in February and March was the first of its kind between Uganda and South Africa. Previously, the summits were political and they were based on diplomatic and political discussions. So as Private Sector Foundation, we met with a couple of private sector players in South Africa, mainly the Ugandan business community in Southern Africa. So South Africa, Botswana, Mozambique, Namibia. And we felt that summits from now onwards should really include the business community. And so PSFU offered to be the secretariat of the Ugandan contingent. And so we went to South Africa and had sideline meetings with the business community. In our view, it was a very successful meeting, the first of its kind, and we came out with some very good discussion points that would then lead to. Now, in those meetings, we mooted a couple of things. Number one was the need to increase trade and investment between Uganda and South Africa.
This is a government-to-government initiative. Why would MTN, a telecommunications company, choose to get involved in the Uganda-South Africa Trade and Investment Summit?
Thank you, Jackie. So MTN, as you know, is a South African company, largely owned by MTN International, but it does have a large portion of it that's owned by Ugandan retail investors, shareholders. MTN has, as part of its strategic objectives, a nation-state's agenda that it seeks to implement in every country that it operates. part of this nation state's agenda is to align ourselves with the national development objectives of the country. So in Uganda, we are aligned to the National Development Plan, NDP 3, I believe it is. And one of the tenets of NDP 3 is to uplift the lives of the everyday Ugandan, the Muntu wa wansi, as we say. And so we think that by participating in this summit, we will indirectly impact the lives of the everyday Ugandan through agriculture, through infrastructure development, through attracting the right investors to come and invest in Uganda, and thereby uplift the economic status of Uganda.
Now, coming off of that back end, what are the potential benefits, especially for Ugandan businessmen and women?
So if you look at Uganda as a business case, Uganda is one of the biggest agriculture exporters, but we export most of our products in raw form. So raw coffee, tea, raw minerals, fish products. We don't export processed stuff. So we get very little money in terms of our earnings. South Africa is the biggest industrial player on the continent. They in turn have got very big leverage. They have got a history of industrialization, their IT, their financial system, their trade regime is very, very advanced. But being an African country, it was necessary that then we discuss elements of technology transfer, joint ventures. So essentially we invited South African companies to come to Uganda and be part of the industrial transformation and value addition regime. So that was very good for us. So between March and this time in August, a lot of companies have expressed interest in investing in Uganda.
I see, Enid, as MTN, you've been in this market for over 20 years. Yes. Perhaps you can share your views on the business environment here in Uganda and where the opportunities lie for South African businesses. 25
years this year, October, will be MTN's life in Uganda. And I can tell you that it's been an exciting journey. So the economy is growing, right? As I said, there are areas that we could improve. For instance, high cost of devices, taxation, we could improve our infrastructure. We have started to see regulatory stability, which was not always something we could take for granted. We've seen political stability, which is a good thing for an investor. We have a very youthful population. That speaks to availability of the market. And that's exactly what MTN has anchored its portion of its business on. So the business environment could be better, but with resilience and with very strategic alignment to proper stakeholders, I think that any business can thrive in Uganda.
What is the role of the private sector in achieving these goals?
In all spheres of engagement, we have a mantra here that business is government sector-led, private sector-driven. Once the protocols are signed, it's the private sector that takes the day. Private sector is the biggest employer of any sphere of engagement. The private sector employs more people than government. The private sector pays taxes. Those taxes go to the treasury. The treasury then allocates that money in the national budget. When they read the budget on June the 3rd, they're basically saying, this is the money we collected from you, and this is how we're going to spend it. It's only fair that the private sector takes the lead in terms of growing that profile. Like I said earlier, a lot of our business engagements are largely very, very primary products. So raw coffee, raw maize, raw iron ore. We need to transform that into steel. For that to happen, we need incentives. We need financial support. We need to mechanize. We need to train our private sector to skill business development services. All those things boost an economy and essentially create jobs, bring in income. But at the end of the day, we need to export. But we don't need to export at the primary level again. We need to export at value addition. And that sometimes does not come easy. That's why we are discussing the need to have joint ventures. and basically scale up our capacity to earn more, and then of course grow the economy. So the private sector is critical. Hundreds of companies are coming. We at Private Sector Foundation have been very pivotal in ensuring that we have as many members coming onto the table.
For the businessmen and women who are looking forward to this summit, can you talk to us about what is actually going to happen at the Uganda-South Africa Trade and Investment Summit?
The summit takes place on the 5th and the 6th of September. We will have several set-up areas. In the main area, we'll have a plenary session for 2 days where we will have interactions between governments, the South African government and the Ugandan government, to continue discussions around business issues such as visas, such as infrastructure development, such as taxes, business that concerns the government, things that the government would deal with, policy issues. We will also have investor-to-investor discussions. We have linked Ugandan investors interested in exporting their produce to South Africa with South African businesses. We have invited South African investors to come and explore what Uganda can offer. We have people in tourism, we have people in hospitality, we have people in agriculture. We've also had people in oil and gas, timber, dairy, meat production, cereals, grain production, and so we think that the South African businesses can come and add value to the Ugandan producers.
How do you envision private sector with Uganda and South Africa coming together to grow both of our countries' economies?
At the summit, BUSA, which is the Business South Africa, and the Private Sector Foundation of Uganda came together, and we shared a joint communique. That joint communique proposed 4 things. Number 1, the need to grow business. How do you grow business? You must understand what is available, what you can sell, what you can buy, what you can improve. The second point was joint ventures. We are not complete in ourselves. So they have what we don't have, we have what they don't have. We come together and we have a business discussion. The third thing was direct investment. We asked them to come and invest more in Uganda, even though they are the biggest investor, but we hardly have any investment in South Africa. So we suggested that, can we have investment opportunities for Uganda in South Africa? South Africa is a net importer of coffee. We are a net exporter of coffee, but they import processed coffee, which is coming from Uganda, but is coming from Europe at almost 3 times the price. So we said, wait a minute, this is not nuclear science. We can actually invest in South Africa, send our top grade coffee, process it there, have it branded in South Africa and Uganda. In any case, it's coming from here. And then we have a win-win situation. So that was the joint venture. That was the element of investment. The fourth was technology transfer. Again, South Africa is a leader in lots of technologies, mainly agriculture. That is lacking here, and it's affecting our productivity, it's affecting our ability to earn, to employ, but also we are now going through, you've been hearing issues of standards, aflatoxins, mycotoxins. That is technological. It's about harvest, post-harvest, storage, warehouse receipt systems, etc., which are very advanced, but they are not very complicated. So we're saying, let's have that system here, and let's share the dividends that will come from it.
Wash and Wales, a Greek mechanization specializing in assembly of advanced equipment designed to enhance farmer productivity, is one of the local companies gearing up for the summit.
I would say that we are very proud as Wash and Wheels because we act as a link to mechanization between us and the farmers. That is one important thing. But above all, I want to say that this sector that we have ventured in, it's been a dream. And it is a dream that we are trying to put in practice. Having this summit is going to enhance our market for our products, especially the South African region, because already in Uganda here, we feel that we have products that we have not been able to move to other regions simply because of a few custom issues and there. And we feel that this could help us to harmonize those difficulties, and we should be able to cut across and supply these products elsewhere. Yes.
Welcome back from the break. Now, change is the dominant factor of life in every business today, and the ability to master and exploit change has become one of the most sought-after management skills. This is particularly true for marketing, where the very tempo of change is constantly quickening. On View from the Top, we look at the changing face of marketing with David Balikudembe, the president of Uganda Marketers Society.
Hello, David.
Hey, Jackie.
Now, as the president of the leading organization for professional marketers in Uganda, what advice would you give to aspiring marketers in terms of skills development?
Nice, good question. Because I say good question because the Uganda Marketers Society, that is one of our areas. We want to groom talent. We want to actually go down in the grassroots and interest people in marketing. When I was growing up, marketing was not anywhere near my dreams. So, yeah, basically, first of all, to lead by example, but to go down there and tell young people what marketing is about, and then try and attract great minds, not doing marketing because you could not get a good course to do in campus.
From your personal experience, can you share a pivotal moment that changed or shaped the trajectory of your career?
For me, it is when I enrolled to study at Chartered Institute of Marketing, because I had done a bachelor's degree in marketing, got a first class, but I was confused. I knew what the marketing mix is, but I could not apply it in a business or in a marketing scenario. But when I joined the Chartered Institute of Marketing, I made a deliberate decision to start from the beginning, that is level 3. And you practice right from there. So you get a company or a business and work with that through all the stages of the journey. So whereas I knew consumer behavior, I knew the marketing environment and stuff like that, I had no clue how to apply them in a day-to-day marketing scenario. So when I joined the Chartered Institute of Marketing, it was a turning point for me.
As president of the Uganda Marketers Society, you have quite the vantage point on the entire marketing sector. Can you describe in a few words what the past decade has entailed, especially in Uganda?
In the past, when we set out, you had marketing meant either a road show where you have people on a truck dancing Lingala and shouting the brand. But today it is more tactical, it is subtle, it is embedded in the customers' day-to-day lives. So it is no longer disruptive and invasive, but it is a seamless intermarriage between your day-to-day life and what the marketer is trying to communicate to you.
Now, you've mentioned technology, and as you know, technology has given birth to the rise of digital influencers. How does a brand maintain its integrity whilst also following consumer behavior?
Influencer marketing is a very good tactical tool, but I think the danger that I've observed is brands or companies using it in a tactical manner. So they come in the middle of the year, sign up an influencer to go out there and say this or that. But it's not integrated nicely with their long-term strategy, and sometimes it doesn't augur well with their values, with their ethos, with the corporate culture. So when there's a disconnect between the personality of the influencer and the brand personality, it leads to a confused positioning. So customers do not know where to place you. Is this a niche brand? Is it mass market? Is it aggressive? Is it laid back? So I think there's need to blend the personality of the influencer with the personality of the brand.
Gone are the days where branding was only for companies. Today we see things such as personal branding. What are the essentials of branding for companies but also individuals?
So traditionally we used to know a brand as either a logo or a color or the company name. But a brand is much more. it ropes in, like I said, the culture, the values, the people, the physical evidence in terms of, how does your building look like? How do your askaris dress? How do they talk to the people? So it brings together brand image and positioning. So positioning is what the place that customers place you in their minds, and then the brand is what you communicate. So the brand personality has to speak to the consumer, and specifically to your targeted audience. Maybe not everyone, but your targeted audience.
Let's talk about the future of marketing. Gone are the days, like you said, where marketing was something that you did because you didn't get into a good course. As president of UMS, what are you doing to ensure that this profession is formalized?
We have, fully adopted the Chartered Institute of Marketing definition, whereby marketing is about identifying and satisfying consumer needs profitably. So we are bringing in the figures, the numbers, which has been a problem in the past, where the leadership, finance, procurement, IT do not understand the things that marketing is saying. They're talking about awareness, they're talking about likes and shares and retweets, but they are waiting for you to talk about the numbers. So we're trying to make sure that marketing is highly measurable, whereby return on investment is key. You can speak about productivity in a way that the finance person will understand, and that is where things like internal marketing come in, where as a marketer it is your role to make sure that procurement buys into your campaign or your product innovation. IT, because now IT is a very big component of marketing. You need their buy-in, otherwise you'll get resistance. You get at times where you go out there and you're asking an employee of a company, how is this new product of yours? He says, those guys just imposed it on us. So I don't know, for example, how many times you use Afro-Mobile as a product, but internal marketing becomes very key for any marketing effort to succeed.
In today's fast-paced digital era, consumers are constantly bombarded with marketing messages from every angle. How do you see brands building meaningful connections with their target audiences?
Research and insights, they play a very big role, so that you know what makes sense for the customer and what doesn't. Knowing which platform to talk to them at and at what time. And that is where things like influencer marketing, very tactical and subtle influencer marketing, not necessarily talking about the product, but associating with it or using it in a clever way, come into play. So understanding your customers intimately helps a lot in being able to make sure that your message reaches out.
Finally, data-driven marketing has become increasingly prevalent, providing valuable insights to marketers about their consumers. But how can marketers use data ethically and responsibly without invading on consumers' privacy? Yeah,
that's a very important question, because as we speak, ethical considerations and privacy have become part and parcel of any marketer's day-to-day lives. So there are tools that can be used to make sure that you resonate with the consumer without necessarily being very invasive, and asking them to like your every communication and picking every data point that there is on them online.
Welcome back from that break. Up next is the breakdown.
A unit trust is a type of mutual fund where money from many investors, called unit holders, is managed by a fund manager to achieve a specific return. This fund manager then creates a portfolio of investments and assets. With a unit trust, the fund manager invests in bonds or shares of businesses on the stock market. The fund is then split into units, which is what you buy when you invest in a unit fund. Unit trusts are one of the most popular forms of investment. They're generally used by investors who want to buy shares and other assets across a mixed portfolio but have limited time or expertise to manage such investments. The value of investments or income from a unit trust may go down as well as up, so you could come out with less money than you put in. And how does a unit trust work? A unit trust investment follows these general steps. Money you invest is pooled together with other investors into one fund. The fund manager invests this money in different asset classes to spread and reduce the risk. Then the total fund is divided into equal units, which is what investors buy. You hold this unit and hope to make money as the value of its assets rise in value over time. So what's in it for you? Unit trusts have become increasingly popular because they provide cost-effective access to both fixed income market and the stock market. An investor is able to diversify risk and tap into some investments that he or she would have been unable to access without the expertise of a professional fund manager. Number 1. Investing your funds in a unit trust is one of the easiest ways to earn an income from your savings. Compare it with what most people do: save their money in a bank account or invest in an income-generating business. Unit trusts champion these common solutions because they earn a higher passive income over the interest rates at your local bank account. Businesses, on the other hand, demand an active role from the investor, including time, know-how, strategic market knowledge, high financial requirements, and management for the fighting chance that it will produce a return on investment. With a unit trust fund, your financial goals are achieved through one key individual action of your own: small, consistent, or lump sum investments. The rest of the work, like strategic fund allocation into interest-earning assets, is delegated to the fund manager. This frees you up to focus on monitoring the performance of your investments and guide your manager where the need arises. All investments have an appetite of risk. Risk is the price you pay for making your money work to earn a profit. Even decisions like choosing an education have risks involved. You pay to go to university in the hope that it will increase your chances of getting employed at the risk of the job market saturating or an economic downturn. In financial markets, high returns are almost always paired with high risks and vice versa. You may wonder then, if the risk is unavoidable, is there room for risk-averse investors? Absolutely. In fact, data shows that most people are averse to risk, particularly of the financial type. Fund managers with diversified trusts can offer investors access to low-risk investment vehicles like treasury bills and bonds in exchange for conservative returns. 9% to 12% interest on average in Uganda, or higher promising but fluctuating returns from equity markets for investors with high-risk profiles. Licensed unit trusts are guided by the regulatory approach to assess an investor's risk appetite before they can advise them on an appropriate investment strategy. This kind of financial advisory support is rarely afforded to people embarking on an investment. Most experts agree that investing is a long-term game. You are assured of multiplying your seed investment only if you're patient enough to wait for 5, 10 years or even more to see it through to maturity. With no restriction on maturity or the amount you can withdraw, unit trusts allow investors to grow their savings and liquidate them within a few working days. Number 4. Unit trust funds operate under the license and regulation of the Uganda Capital Markets Authority. In this system, fund managers are the customer-facing entity responsible for helping investors structure and implement their investment strategies. What fund managers don't have access to is investor assets which are held by a custodian, typically a bank. So, does this mean you should invest all your resources into unit trusts? Not exactly. Any good financial advisor will caution you to diversify your portfolio. Collective investment schemes offer a great way to put your idle funds to work. These are savings you're accumulating for a specific goal, or idle profits from your business that could be invested and gathering interest, as opposed to losing value due to inflation. Experts recommend you diversify your investment portfolio with unit trusts alongside active investment options like seeding ventures or running businesses. They also advise that this kind of diversification spreads out your risk and liquidity to help you manage your different financial needs.
That's it from us this week on Business Perspective. Join us every Monday at 8 p.m. for insights in the world of business. I am Jackie Mutesi, and you have a good night.